Good afternoon. You're watching AB Live, or COVID Live as we call it right now. With job losses, salary cuts and changes in our investment values, there's a lot going on with our money today, which is why we thought that we could host a session about personal financing and budgeting in the time of COVID-19. In the studios joining us, actually remotely joining us right now, we have Steve Cronin, the founder of Debt Simple Saving. Thank you so much for joining us, Steve.
My pleasure. This is something I care a lot about, so I'm very happy to be here.
Yeah, I'm sure we're going to get a lot of insights from you. But like I mentioned in the introduction, there are different people in the UAE and in the wider GCC going through different financial problems right now because of the circumstances, of course. So let's start with the first case, which is if a person has lost his job or has been sent on unpaid leave, what financial resources can he avail right now to get through the situation?
So the first thing is just to manage your mindset, because this is obviously very painful and it can be scary, and you can be quite panicked about this. And I think the first thing you need to do is to calm yourself down and to help yourself believe that you can get through this and that your family will be okay and you won't all be out on the street. And there's a couple of ways that you can help to get a handle on life and make everything a little bit less scary. The first is to understand your financial situation very, very well. And the second is to understand what the government and the banks and the central banks have put in place to help you out.
And what exactly would that be for individuals?
So for individuals, at the moment what we're seeing is that a lot of banks are deferring loan payments. So many banks are just giving a 1 month payment deferment, so they're not for anybody really. And then if you can prove that you have lost your job due to COVID-19 or you've lost your income, then they are offering 3 months. And then for people who've actually had coronavirus and who have been sick through it, then some banks are offering 6 months deferred payments. So there really is quite a lot there to support you. And if you're worried about cash flow, then these loan payment holidays can be a huge reduction on your burden of your expenses every month. So if your bank hasn't reached out to you already, then do actively reach out to them, whether it's by the phone. Obviously, it's difficult to go into branches or some kind of online chat facility. Do your best to reach out to them.
Right.
And see what you can get hold of.
Right. So right now these are on a case-by-case basis, correct? What the banks are providing to the customers. There's no blanket rule or stimulus or relief being provided by all of the banks as a rule.
Yes. So for individuals, the banks are being encouraged to defer payments. There's no kind of overall policy on this. For some companies like Emirates, we've definitely seen kind of company-wide loan payment deferrals. So it might depend on your company. And you can also talk to HR. I mean, if you find yourself on unpaid leave or without a job, do stay in touch with HR from your company. And obviously it's a rough situation to find yourself in, but don't just cut the communication. You can ask them and see, have they been in touch with the banks, especially if there's a very strong relationship with one particular bank and your company. Maybe HR will be able to persuade them to defer loans for people who have been forced on unpaid leave or have been made redundant. That's really the least that the company can do to help you out through this difficult time. And obviously they can access people who are much more senior at the bank than you can. So it might be worth pushing HR for that.
Oh, interesting. Very interesting tip. I just need to remind our viewers right now that it's not just me that will be asking questions. We are taking questions from you. So if you do have any queries related to personal budgeting, finances, etc., just put them down in the comments of this post and we will take them live with Steve Cronin from Debt Simple Savings. So Steve, you did mention that what it is that we can do in terms of availing other financial resources by going to banks, etc. But we've also seen that a lot of companies have have asked or have cut the salaries by 40 to 50%. So at this point, what are the major budget changes that an individual or a family man needs to make?
So the absolute first thing you have to do is to look at your numbers. Now, so few people actually do this, but this will give you an enormous sense of control. Even if it looks bad, at least you know what your numbers are. So obviously, if someone's running a business, they know exactly what their balance sheet is. They know exactly what their profit and loss is. Mm-hmm. Well, I want you to do the same for yourself as if you were a business. So I want you to look at your balance sheet, which is your assets, what you own, minus what you owe to other people. So it might be what you have in the bank in cash. You might have some stocks, and then you might also have a mortgage out to a bank. And if you subtract what you owe, what you own from what you owe, then that gives you your kind of personal balance sheet. Especially understanding your cash at the moment. How much cash do you have? Which currencies is it in? And how quickly can you access it? Because right now, cash is king. So before you even get into budgeting, I want you to understand what your runway is. How long, how much cash do you have? How many months of expenses do you have to be able to survive? And then the next thing will be to understand your income and your expenses. So what's coming in and what's going out. Mm-hmm. Understand what sort of, if you've got a pay cut, does that apply to all members of the family? Are there any other income sources that you can think of? Can you get creative in that area? And then also understand your expenses. So many people, especially in the UAE, they don't like to think about what they're spending. Spending makes them feel good because they're away from their friends and family. It's stressful at the moment. Yeah. You must get a handle on your expenses. Understand what your rent is, what your utility bills are, how much you're spending on food, and then really try to separate the necessities and the essentials from the luxuries. And that's the starting point for you.
Right. So at this point, would you say that the 50-30-20 rule of personal budgeting would still apply, or do we need to change that ratio up a little bit if you've had a 40-50% salary cut?
You are going to just have to do whatever it takes. I think sometimes these rules of thumb just go out the window. I think what you're going to have to understand is if you've had a 50% pay cut, mm-hmm. you have to find that reduction in expenses from somewhere, or you have to consciously decide with your partner whether you are going to dip into your cash buffer. What will give you the resilience to get through this is a cash buffer of 6 months total expenses. And when I say total expenses, I include any loan payments that you might be making, any mortgage payments, even if you've got a tenant who might be paying you, well, you know what, they might not pay you in the future. So if you can calculate your monthly expenditures, total monthly expenditures, and try to have 6 months cash buffer, then you have a bit of a leeway. You won't have to slash your budget quite as much.
I'm sure this is easier said than done, especially because this wasn't foreseen and we weren't really expecting a pandemic, and there are so many people in the UAE who live on a salary to salary basis. At this point then, one advice that I would want you to give our viewers is how to keep enough liquidity with the resources that they currently have, and keeping in mind that they weren't really prepared for a situation like this.
Yes, absolutely. So again, cash is king, and it is difficult. I mean, if you haven't prepared for this in advance and you don't have much cash and you're kind of living hand to mouth, then this can be a very, very difficult situation. And people find themselves in far too much debt, far too many expenses. Do try to stockpile cash. If you're in the lucky situation that you are still getting a salary, then stockpile whatever cash you have. Now, because there are people in a worse situation, people who've lost their job or on unpaid leave, they have nothing coming in, and they may have to rely on whatever cash reserves they have or whatever they can scrounge from their family. Now, for people who are in a serious situation, mm-hmm. What you need to do is to track your cash flow, and this will get you out of a lot of problems. So on a piece of paper or in Excel, what you need to do is you need to track your ingoings and your outgoings on every day and your bank balance for the next month, so that you can see when your bank balance goes negative. So let's imagine you've got a big rent payment coming out, or some kind of loan payment or something coming out of 3,000 dirhams on the 16th of the month, and you know that you don't have enough money in your bank account to pay for that. Well, you need to know exactly which day you start to go into the red. If you know that by the 12th you're not going to have enough money, then you have 2 weeks to figure it out.
Right.
What you need to avoid is that you wake up on the morning of the 16th and you're like, goodness me, I don't have enough money to make this loan payment. So you have to start looking in advance, and tracking your cash flow like that will really save you, because it will put up the red flags in advance, and you can have time to go to the bank and ask for a deferral, or you can borrow some money from your parents or anything to get you out of this situation. And the more proactive you can be with the banks, the better they will work with you. What they don't want to see is you suddenly coming to them a week after you've missed your loan payment.
Right. I think this is one thing that a lot of our experts have told us in the past, and you are reiterating that you need to go to your banks proactively. If you don't ask, you don't get. I'm just going to take a few questions from the viewers that that have sent questions right now. So first question is from Shane, who says, if you have some savings in the bank, what is the best way to use it, as banks aren't giving a lot of interest on savings at the moment?
As in, what is the best way to save and get interest on your account? Is that the question?
Correct. So he's asking if it's gold, shares, property, REITs, what would be the best possible way?
Okay, fine. So, obviously, interest rates are way down at the moment. Mm-hmm. So you're not going to expect a great return on your cash. That's just the way it is. If you can get 1%, 2%, then that's fantastic. But you have to be careful where you're going to put your cash, because if this pandemic gets worse and the global economy really struggles, we may see some banks start to fail. Now, in many countries, there are government guarantees to protect your deposits up to a certain level, but other countries don't necessarily state that up front. So I believe that the UAE doesn't have a government guarantee in place, but if something started to happen, they may still step in to bail you out, but we just don't know. So be careful. Put your money with larger banks. Put your money in places that you trust and that you know that those banks aren't going to disappear, and spread your money around. I believe that everybody should have at least 2 banking relationships in the UAE, just in case you fall out of love with your bank or your bank falls out of love with you. Now, Shane mentions property as well. Now is not the time to tie up your money in an off-plan property purchase. Property prices might be going down further, we just don't know. But property is a very illiquid investment. You're going to be tying up your money for many, many years, and it will be difficult to sell it if you suddenly need that money. So I wouldn't recommend that. Make sure you've got that 6-month cash buffer. Maybe you need to put it up to 12 months. But once you have that, and you still have money coming in and still have money spare after your expenses, then you could be looking at investing it sensibly into the stock market, because stocks are much lower than they have been. Mm-hmm. This is a great, if you are going to buy and hold these stocks for 20, 30, 40 years, as you should do, then now is a fantastic opportunity to invest in the stock market sensibly.
Right, so you're saying now is the time to buy stocks, and I'm just going to quote Warren Buffett here, who said that the best time to buy is when everyone is selling. So looks like this could be a great time for stock buyers and purchasers. But then I'm just going to move on to the debt side of this discussion in terms of managing debt, etc. So at this point, for the ones who've got financial obligations like debt and certain fixed expenditures, how would you say they can manage this in the most optimal way?
If you have fixed expenditures, well, you, again, if you can try to find some kind of interest rate reduction on your debt, if you have a mortgage, always be looking around to see if your bank or another bank will give you a lower interest rate. If you if you can in some way, if you have a lump sum and your debt is expensive, I would say any kind of interest rate above 5%, you should be looking to pay off that debt as a lump sum faster instead of putting that lump sum of money into something like the stock market. Because with the stock market, you might earn 7% on average, plus or minus. So if your mortgage is 2%, then there's no hurry to pay it off. You can put it into the stock market. But if your mortgage is 5%, or if you have a personal loan that's 9%, or heaven forbid, a credit card, which is like 3% a month, which could be like 42% a year after interest compounding, then please pay that off. And also, if your house value is falling close to the value of your mortgage, then you should pay off a lump sum of that mortgage as well, because you don't want to end up in negative equity.
Right. And Steve, I think one huge problem that people here in this region have is managing credit cards. And I've received a lot of questions about this, about how to manage credit cards at this point, especially when they're dealing with more than 3 credit cards at one time. So I think we've got this question from Mary, who says, how to manage credit cards as I have 5 credit cards right now and I don't know how to juggle.
This is pretty scary. I mean, I'm on the National Newspaper's debt panel, and we constantly have people writing in who said they have 5 credit cards and then they've lost their job, and unfortunately they put themselves in a very difficult and dangerous situation. And UAE banks do just love offering you more and more credit cards. Unfortunately, this can kind of make you go into to tempt you into having too much debt. What you need to do, you have to get a handle on this credit card debt. Credit cards are amazing as long as you pay off the balance, full balance, every single month. If you don't pay off the balance in full every single month, you're going to run into very, very difficult problems, and your balance is going to start ballooning. So you have to be careful. Please don't use credit cards for cash flow, for survival, for loans, at the ATM machine, or for investing in companies, all sorts of crazy things that I've come across. What's going to be critical is really understanding how much is owed on each credit card, and then which is the most, if you're going to struggle to pay them all off, talk to all the banks, see which ones will give you a holiday, see which ones have the highest interest rate, and maybe pay those off first, so that you can try to get on top of this debt. You can also go to your bank and try to ask for a consolidation loan. If you have a salary above 8,000, this should be possible. And especially in these difficult times, you should be able to push for this. Again, try and speak to the most senior person you can at the bank.
Sorry, what exactly do you mean by a consolidation loan?
So a consolidation loan is where you might have a personal loan plus 2 credit cards, possibly with other banks as well, and they're all the payments are due on different dates. The interest rates are very high. If you get a consolidation loan, what you can do is convert all that debt into just one loan, and hopefully it will have a lower interest rate. So the interest rate might be 9% rather than 40%, and it just stops your debt ballooning and turning into an emergency.
Right. So correct me if I'm wrong first. So you're saying that if a person has 5 credit cards, then they can consolidate all of these credit card debts or loans into just one credit card. Is that how it works?
They could turn it into one loan. It wouldn't be a credit card anymore. They could convert it into a single loan. So if you added up all those 5 credit cards and the balance came to 100,000 dirhams, then you might be able to turn that into a consolidation loan of 100,000 dirhams. But it may not be possible to get all 5 of those credit cards wrapped up, especially if they're all with different banks. You really have to be careful with this. And I would say, really please try and stick to 1 or 2 credit cards. I know it might be too late for people, but if you are hitting your limit, well, there is a reason that you're hitting your limit, and that is because otherwise you're going to overextend yourself. So please be careful. And if you are struggling, then use that cash flow modeling that I was talking about earlier. Track what exactly is going to come in and out of your account every single day, so that you know in advance when you're going to run out of money, so you can do something about it now, not on the day you run out of money.
For sure, but then we're talking about a debt culture here, right? Where people have had credit cards for a really long time, and like you mentioned earlier, there are banks who keep giving out these credit cards and extending the limits on each of these credit cards. I mean, there probably needs to be a change in this entire culture once we come out of this pandemic, because a lot of us weren't expecting it, and these debts and these credit card loans have ended up becoming burdens for a lot of people. Just on those lines, I have another one of our viewers. We've got Ashish asking us, what are the schemes and holidays available by banks, landlords, etc.?
So for individuals, there's not necessarily one blanket scheme across all the different banks and the landlords, but a good number of landlords have been deferring payments. So it really depends on how reasonable your landlord is. But if you go to them and you say, look, I have been made redundant, or even better, I am on unpaid leave, but my job should be there when I come back to work. Can I please have a deferral of 1 month or 2 months?
Yeah.
And hopefully your landlord may be able to accommodate you. Same with the banks. If you go and talk to them, they should at least be able to give you a 1 month deferral. Some have just been not taking payments without even telling you. They're like, we don't have time to contact every single customer. We're just not going to deduct that payment from your account this month. So you may just get lucky. But definitely ask, and definitely try to find the most senior person you can speak to. If it's a branch manager or someone like that, rather than just phoning a junior person up on the phone in a call center, they may not have the power to help you.
Interesting. So asking for the right people is also key when you're contacting your bank. Great. Again, I just need to remind our viewers, we are taking questions from you. So if you have any questions about personal finance, budgeting, etc., post them in the comments of this live session. We will take it here with Steve Cronin. Another problem, Steve, that we've seen is with schools. There have been a lot of parents who've been complaining about the non-reduction in school fees, where there needs to be a reduction considering their jobs have increased over the last month or so, because they are obviously teaching their students, staying at home, and also salary cuts have happened. And some of the banks have also agreed to provide school fee installments. So with keeping all of this in mind, what is it and what is the right way to go about just making the payments and also dealing with school fees and other such expenditures in the right timely fashion?
Well, I think with school fees, you do have some right to demand a reduction. School fees are pretty expensive in the UAE compared to the rest of the world.
Second highest in the world.
Well, exactly. And if your kids are just staying at home, they're not using the school facilities, then you should be able to negotiate some kind of rent. I think this is where the power of the masses comes in. Do get together with other parents, do make a fuss and be difficult. Now is the time to be a bit difficult and stubborn with your bank, with your school, and try to haggle things down, because in a way it's justified. They're not providing the full service at the moment, and therefore you should really try to push for this. I think individually, but you do have much more power if you do get together with other parents, and if you can get representation from some parents who might be more experienced or senior dealing with the school, then they should really push for this together. Now, sometimes banks are very happy to take your payments and break them up into monthly installments or whatever, and maybe you pay a little bit of interest for that. It might help you get through this time. So instead of paying a lump sum 3 times a year, or even worse, once a year, that you can break it up into monthly installments, and that might be worth looking at, as long as the interest rate that you're going to get on that isn't too bad.
There's also a lot of questions about planning for your child's education in the future, because a lot of parents have been saving up for higher education, etc. So are those things going to change, and would you recommend parents to probably put that on hold for now, considering the situations are so ambiguous?
It really depends on your own position. So if you still have income coming in, and you can still cover your expenses so that you can live reasonably. There's no point in living on potatoes and rice for 5 years just so that your child can go to college. You have to make this sustainable.
Yeah.
But if you have enough money, then I would say please don't go to one of these like education funds, education plans that are getting flogged by financial advisors. The fees on those are very high. The structure is rigid. You can absolutely do this by yourself. If your child is young, let's say they're 1, 3, 5, and you're saving up for university, you can put this money in stocks, say 90% stocks, 10% bonds. And when we're talking about stocks, we're talking about a passive index tracking globally diversified stock fund or stock ETF, exchange traded fund.
Right.
Now, as you get closer and closer towards the child's university date, unlike retirement, you are literally going to be taking out big chunks of money and spending it. And so you cannot have any stocks in that fund by the time you're like 2-3 years away from that university start date. So if your kid is 14, 15, you need to start moving that fund. That heavy growth period is over now, and you need to start consolidating into something a bit safer, like bonds, like fixed deposits, like cash. And that will preserve the money, because as we've seen this year, the stock market can be very unpredictable over a 2 to 3 year period. And so you can't risk your child's education just because the stock market's down.
For sure. Just taking a few more questions now. We have Alex asking us, how is it that I can improve my credit rating given these circumstances?
Yeah, interesting one. I mean, it's going to be a difficult time to improve your credit rating unless you have some ready cash and a good cash flow. If you do, the best way to improve your credit rating is just to make sure you pay everything on time. Put your DWA bill date on your calendar. Put your loan payment date in your calendar. Pay them off in full. Always pay your credit card off in full. If you have a credit card, make sure that you are not spending all the way up to the limit. Ideally, spend something like up to a third of your limit and then pay it off every single month. And that will show to the banks that you can handle your finances sensibly and that you can handle some debt. And over time, this will start to increase your credit rating. I'd also urge to anybody, go and get your credit report and your credit score checked. I think it costs about 105 dirhams. You can go to the AECB app in UAE, and it will show you your report and your credit score. And this is important because it's a fairly new system, 2-3 years old, and sometimes they make mistakes.
Right.
If you closed an internet account or something like that, and it didn't get closed properly, it might be there as a black mark on your credit report, and it might be reducing your score. So do check it now before you need it.
But why would you say it is important to check your credit score on a regular basis? Why?
Because your credit score determines what interest rates you're going to pay on loans, and it determines what product you will get access to, whether you'll get access to the best credit card, the best loan product or not. So if you have a high score, and the highest score is 900, so imagine you always make your payments on time, you're very trustworthy, you're very diligent, then you'll have a high credit score. And because the banks perceive you as a lower risk, they will give you a lower interest rate on your loan.
Okay.
If you have a score of 300, which is the minimum, it means you never pay on time, you're very flaky, you're very unreliable. No bank will really want to lend to you. Therefore, they will charge you a very high interest rate and they won't give you access to the best product.
Understood. All right. So we're just going to put those details again in this comment below. You said AECB, is it? That's the app that we need to download to check our credit score.
That's correct. AECB, yes.
Great. We'll just post in the details about that in the comments, so you can come back to this video and just click on that link. Just moving on to the investment side of this discussion in a bit. But again, before that, I will remind our viewers, we are taking questions from you. We just have another maybe 5 or 10 minutes of the conversation. So just remember to post in whatever questions you have about personal financing, budgeting, investments in stocks, shares, property, etc. Just post in whatever question you have, and I'll take it here with Steve. So again, right now with investment values going down, one major question that a lot of our viewers have had is it the right time to sell, or should they panic and sell the investments that they've made, considering it could go down further?
Right, so panic selling is a disaster. And we've all heard, my friend's husband has sold all his stocks and he's positioning himself for a downturn. This is a load of rubbish. And in fact, anyone who's chasing financial independence or trying to grow their money in the stock market, if you panic sell during a downturn, then you will destroy any growth in your portfolio, because what will happen is you'll get out of stocks, and then we even saw this, right? So the stocks have gone down and then they bounce back up again, but you've missed the bottom, right? You've missed the bottom. You're still in cash. Stocks have gone back up 20% maybe, and you're too scared to get back into stocks. And then stocks will carry on going up 200% maybe, and you'll never get back in them. There are some people who jumped out in 2008 and they never got back in again. So you have to change your mindset. You have to say, I am going to invest with a 30-year mindset. And honestly, when we look back in 30 years' time, this will just be a little blip. It might be a 1 to 2 year blip, but it will be a little blip. If we look back to 1987 and Black Monday, which was the biggest percentage drop on the Dow Jones, the US stock index, 22% in one day.
Wow.
If we look back on that on the chart, you won't even notice it on the chart. It's just a little blip. And so you have to have this 30-year mindset. So people who are panic selling, this is absolutely not the right way to go about things, because the stock market is so unpredictable. And the best analogy I can give is, if you were going to build a hotel in Florida, you will make lots of money from all the tourists, but you know that there are hurricanes that are going to come.
Yeah.
And when's the best time to prepare for that hurricane? It's not in the middle of the hurricane when you're trying to board up the windows. And therefore, the reason that the stock market gives you 7 to 10% on average, including those bad years, is because you're getting a little bit higher return than you would just being in cash because of these hurricanes. So if you cannot face these hurricanes, you shouldn't be in stocks at all.
Right, interesting. So you're saying that panic selling is a bad idea. How about buying stocks though? Would you say that is a good idea now?
Buying stocks is a fantastic idea as long as you have the money. So the first thing you should do is make sure you have your at least 6 months total expenses cash buffer, because you cannot. The worst thing you can do is put all your money in stocks and then realize you need it and have to pull it all back again, and the stocks have gone down. So we have to avoid that. So have your cash buffer. Think 2 to 5 years ahead. Do you have any major expenditures coming up? You might have an MBA, a wedding, your kids' universities, your house deposit, a new car, that sort of stuff. You cannot put that money into the stock market, because the stock market is too unpredictable, as we've seen this year, over 2 to 5 years. So you have to tuck that away in cash as well. But if you've covered all that, then you've got those safety nets in place, then you can start to put your money that is left over every month after your expenses into a sensible mix of stocks and bonds. And you do that every single month for the rest of your working life. You will transform your finances.
But how would you say about individual stocks now? Are they too risky to even consider?
No, not at all. I mean, the fact is that if we look at stocks, they are down. They're still down on February. So you are getting, obviously February was the peak of like an 11-year bull run. And you are still getting a nice big chunky discount on those stocks. It may not be such a big discount as you would have got on March the 23rd at the bottom of the market, but it's still a nice discount that you're getting. Now, we don't know what stocks are going to do. They might carry on going up. They might go down. We don't know. But because you're investing with a 30-year mindset, all you have to think of is that I'm putting this money in for the long term, and I'm getting a 20% discount on what I would have got in February. And ideally, you put some money in now, and then you put some money in May and June and July and August, and you keep putting money in. Then it doesn't matter what the stock market does, because you're just riding it, the ups and downs, like a roller coaster.
Of course, I mean, yeah, right now we're going through a down phase, but there is going to be an up phase because it's not going to last forever. But at this point, what would you say is a good and safe investment for people who are still living on salaries? Is it gold? Is it
Um,
property? Is it stocks? What would you say it is?
I mean, it depends what you mean by a safe investment. Like at the moment, no investment is safe. We don't know what's going on in the gold market. We don't know what's going on in the property market. We don't know what's going on in the stock market. The only investment that is safe is cash if you spread your cash around across different banks. But hopefully people who are wanting to earn a little bit more, I'm not a massive fan of property because especially in emerging markets, we just do not know what the property markets are going to do. Oil prices have crashed around the world. That's going to have huge impact on many emerging markets. We just don't know where property markets are going to go. And also, I don't like the illiquidity of investing in property. You buy a property and then that country or that location doesn't work out, then you've got quite a big problem on your hands. I prefer to invest in the stock market. A lot of people don't take enough risk over the course of their lives. And therefore, obviously, the stock market is risky. But if you invest for the long term, if you keep fees below 1%, you keep fees nice and cheap, and you diversify globally, so you're just buying a global stock ETF and a global bond ETF, then you can reduce a lot of that risk while still keeping the return. Then investing in the stock market, not gambling over 20 to 30 years, whereas it clearly is gambling over 1 day, 1 week, 1 month.
For sure, but then when you're talking about risk mitigation, a lot of people are looking to mutual funds. Would you recommend that right now?
Yeah, so the sad fact is that as an expat, we can't easily get access to mutual funds. Certainly not from the big guys like Vanguard, Fidelity, iShares by BlackRock. We can't get access to their mutual funds. But what we can get access to is exchange-traded funds, which are basically almost the same. And that way, if you use an offshore broker, someone like Interactive Brokers or Saxo Bank or Swissquote, you can get access to those Vanguard exchange-traded funds, to iShares exchange-traded funds. This is the key to expat investing. It took me about 4 years to figure this out. Not full time, but back in the day when I knew that I wanted to invest in Vanguard, I didn't know how. This is the key. So exchange traded funds plus an offshore brokerage like Interactive Brokers, this is going to be transformative for your investment.
Oh, that's super interesting, and thanks for sharing that with us. I'm sure a lot of us didn't. I didn't know it, for example. But yeah, just moving on to some other parts of this conversation. But before that, of course, reminding our viewers that we will be taking a few more questions. So if you do have any questions, just post them in the comments here. The psychology of money is what I want to get to now, Steve. There are bad thoughts and instincts right now with regards to money and what's happening with the money, with regular income, etc. How is it that we can overcome them and get in the right money mindset, if that's a thing at all?
Well, yeah, I think people will be permanently scarred by this downturn. We've had 11 years of reasonably good times globally, and so people pick up all sorts of bad habits. So people have got too much debt, it's been too easy to get credit cards, and you get into this spending culture. And you have to change this for yourself. Like, you have to be an adult now. You have to learn how to delay gratification. And if you are spending money because you are away from your friends and family and you have this big hole in your heart, that's not going to be filled by going to brunches or by buying endless handbags or gadgets. It's not going to fill it. Equally, you have to be able to say no to the credit cards, because yes, the central banks and regulators, they can make sure that the banks are not ripping you off on credit cards too badly, but there will always be someone offering you a credit card and offering you more debt. It's up to you to say no and to take control of your finances. And if there's one lesson from this pandemic, you may have to learn this lesson the hard way, but hopefully you're still young enough to survive and face the next downturn in 10, 20 years' time. You must learn from this now and remember this now. And if it teaches you to be a little bit more frugal, to stockpile a bit more cash, to not throw all your money into off-plan properties or just wasted away. This is a very, very valuable lesson, and it might be painful now, but it will be a lesson that you keep with you for the rest of your life. Equally with investing, if you can invest during a downturn now, you will be fine for the rest of your life, because you will remember this downturn. You're like, if I could get through that downturn without panicking, then you'll be able to not panic sell for the rest of the 30 years, and you'll be absolutely fine.
Great, and that sort of brings me to financial literacy. How is it that everybody watching your show right now can improve their financial literacy?
So I'm really passionate about financial literacy because I think there's a real lack of financial literacy in schools, in universities, and also for expats. Many of us are expats in this country, and there is no useful information. And in fact, there are actively people putting you into bad products like long-term savings plans on a commission basis. There's plenty of financial advisors out there who are not giving you the right information. Please stay away from these long-term savings plans. So therefore, if you want to learn about financial literacy, don't Google personal finance. Google something like financial independence, because this will give you useful information from people who are not trying to make money out of you, from people who are just sharing what they've learned themselves. And there are some amazing initiatives like the Simply FI Facebook group. I think we've got like 9,000 members now in the UAE. By comparison, the London Financial Independence group, Facebook group in London, which is a city of 10 million people, they have 2,000 members. So we've got nearly 5 times the membership, because there is such a lack and such a need for financial literacy in this country. And then I suppose also my website as well. I try to provide information at deadsimplesaving.com. I try to provide information on expat saving and investing, just because there is such a lack of it. And now is such a good time to learn about this stuff, because the lessons are very, very real, and we really feel it at the moment. So now is a good time, and it will give you a sense of control. You need to take control of your own finances, planning, saving, and investing. And absolutely, it is simple enough for you to be able to take control of that. You don't need an advisor. You don't need to rely on your partner. You can absolutely do it yourself, and you need to do it yourself, just in case your advisor or your partner turns out to be not as good at their finances as you thought they were.
Great. Yes, definitely going to deadsimplesaving.com and going to go through the content that you've been posting there. But we need to be doing more of these and on more specific topics, like you said, to improve our financial literacy. I've definitely learned a lot from this session in the last hour or so. So thank you, Steve, for joining us, and thank you for giving us those valuable insights.
My pleasure. Thank you very much.
Right, and thanks to all our viewers who participated today and watched AB Live. We will be back again next Tuesday, and also Ramadan Kareem to all of you.